All right, what is going on, Discord family, and welcome back to another edition of Market Review with me, T. Hobbs. Let me change this banner here, actually, because this banner is saying top-down analysis. Let me go with Market Review to the 7 power. I can switch that right here. All right, save that. There we go. All right, drop that on there. Okay, welcome to another edition of the Market Review. Today is Monday, April 7th, 2025, year of our Lord. And if you guys know, you know, the market was absolutely sizzling today. I mean, sizzling, on fire, whatever you want to say, un fuego. I don't know what language you speak, but all I got to say is we took advantage of it. We were done trading in the first 10 minutes, maybe 15 minutes of the market in the shop. A couple of us kept going. Me, I was done and folding laundry by the first, literally like 9:45. It was super simple. All we did was follow our plan. We understood what the market was trying to deliver. We went over that plan, which is what I'm going to go over here with you today. I'm going to take you through some of the trades I took, and then we'll go over the other instruments. I didn't write plans for those instruments, but everything, luckily for us, everything moved very, very similar today. And I'll go through like a lot of my setup. So we'll start over here as per usual with the S&P 500. Right, we'll take a look at the daily candle. What we saw on the daily candle was we saw that huge gap down that created what's called an in-wall, new week opening gap, right? But we all know that in order for the market to be bullish, it needs to trade down first. If you guys haven't done so yet, I strongly advise you to watch the top-down analysis that we did on Sunday discussing this exact price action. When we talk about this price action on a Sunday, and then we get that exact same price action on a Monday, it makes for a much easier day, right? And it's not a coincidence that we're done in 10 minutes. It's preparation that allows us to be finished in the first 10 minutes, okay? So go back and watch that top-down analysis if you haven't watched it already, because what we talked about is we talked about on the weekly time frame, we talked about this range right here from October of 2023, this high to this low being the range in which we were going to be playing in next. Every single path that we've taken, we've stopped besides this one, we just ran straight through it. But we played in every single range, right? We created a base, we created a rally candle, then we just dumped right through it. We're doing the exact same thing inside of October 2023 range from the October lows to about the July 2023 highs. That's the area that we're playing in. We expected that this area would definitely be a mitigation of the buyers that are down here, meaning it'll be an area where the buyers should want to react with price. Once we understood that, it was game on in regards to our pre-market plan. So let's go ahead and put that pre-market plan up and we'll take a look at exactly what we had planned for the day. All right. First, we'll start over here in the gray box, right? Top left. Gray box is our macro. That's basically the information or the context in which I'm coming to my conclusion for the day, right? On what I plan on doing with price, right? This plan is written 2 hours before the market opened. So there's nothing in hindsight. Everything is what I'm reading on price action. Our current conditions, we were bullish. We were in a bullish retrace of a bearish trend. What that means is that the market is clearly bearish, right? But now we're retracing back to the highs, right? Or to the high that brought that low, right? We were bullish as long as we stayed above 4830. What does that mean? That means that as long as we stay above this level here at 4830.75, then I'm looking to long the market the closer we get to that level. Right? Bearish below 54.26. We remain bearish as long as we stay below 54.26 or the weekly fib up here. And you can see the closer we get to that level, the more you should be looking to short the market in that scenario. What was my thesis on the day? I said we had a massive gap down, right? And it's exactly what you want to see to be bullish. Remember, I write this 2 hours before the market's open, right? So to start the week, we double bottom off the Tokyo lows in the London session. And now the bulls are looking to set a new high inside the in wall. Okay. Look for bulls to continue to push price higher if they can get back above the previous day low. And you can see this yellow line here, 57.9 was the previous day low. What did they do? They pushed price higher. Okay. Otherwise, trade the overnight range, which is this yellow box here, right? Until it breaks, right, to the upper downside. All right, so now that we have our macro, where are we looking to trade exactly? Inside of these plans, what I give you guys is I give you the ranges. If there is a separate overnight range, I give you the PM session range every single day. But if there's a separate overnight range, meaning we've done some crazy stuff, I'm going to give you that range too, because as we know, the market doesn't move straight up. It moves in ranges. So it would behoove us to understand and pinpoint where those ranges are so we know where the extremes are at all times. Most of us are reversal traders in here. Some of us are scalpers. And I don't care who you are, as long as you're learning how to make money and you're going to understand how to be safe and manage risk, right? Overnight range, we wanted to look to short the highs and long the lows, or a break and retest off the highs and or lows, depending on which one breaks first. In this scenario, we were looking for the highs to break, right? So that means that we were looking for a break and retest off the red box. We were looking to long off the green box, and we were looking to short from the red box in the event that price, in the event that price showed weakness. What was the high of the range? 5040 to 49.86 at the high. At the low, 48.95 through 48.3425. Our extreme plan down here to the bullish side, we were looking for that weekly level, that weekly demand zone that we talked about, right? When we zoomed out, October 2023 lows, we were looking for the market to tap back into this level, and we're still looking for that in the event that we go bullish on the rest of the week. If price came down here, we wanted to see buyers defend 46.56 through 44.8850, and we wanted to look to long the market targeting the bottom of the range at 48.94, 48.3250. We didn't have to really worry about that, so I won't beat a dead horse on that one. Above us, we had the PM session range from Friday that I do not delete because it will come into play. The same thesis here. We were looking to short the highs, which is exactly what the market did. We were looking to long at the lows, which is exactly what Trading Yoga Girl did. Shout out to her, right? And if we got above the highs or below the lows, we were looking for a break and retest from those areas. What was the high? 52.77 through 51.90. What was the low? 51.1825 through 50.7950. At the extreme highs, which we did not get to participate in, we were looking for an extreme on the 4-hour level to sit and short weak rallies into the 4-hour supply at 53.80 to 54.2650. And we wanted to look to target the previous day high, right? Which was also August 5th low. And if you know anything about that level, it was really, really important. We were looking to target the daily fib and then potentially the previous day low. Market never came up here, but that doesn't mean it won't try to come up here tomorrow. Price is continuous. So we're still going to be watching this level for potential shorts off this level tomorrow. All right. So now that we look at the pre-market plan, we can kind of come down and look at some of the trades that we took, right? So actually, let me look in the Shout BC and actually pull up some of my trades. Here, we'll pull this one up. I only took one trade I took two trades in the New York session. I took some more trades inside of the Asia session, right? So here, we'll share this one first. So what I did, right, as I told the Discord, I said, hey, I'm looking for price to come into this level down here in the 4800s, 4872s, right? I ended up getting in early because, you know, I be FOMOing sometimes, right? Let's keep it real, right? I got in at like 4900 or something like that, or something like, I can't remember exactly where I got it. I think it says it in here. Yeah. Yeah, I can't really read it. Anyway, ultimately, I ended up getting back in at 48.79. I took one loss. It was a 3.25 point loss. I cut it early because I knew we wanted to come down a little deeper, right? And from there, I ended up getting long at 48.79.25. I added to the position at 48.73.75. I added again at 48.71.50, which was basically the low of the day. Average position was about at 48.72.75. I think it might have been a little higher than that, but once I sold the first three or the first 5 contracts, I sold them at 48.86.75, and then I held the other 2 into 49.23 for 50 points. I was done for the day after that, right? And that was pretty much my trading day, right? Like I took some trades in the Tokyo session, which I'll discuss here. But I don't think I took any screenshots. Maybe I did. I can't remember. But okay, so what did we see? What made me get into this trade, right? Or what made me take I actually took shorts. That's what I did. I took shorts in the morning. I actually took 3 trades in New York. My bad. But what made me get into the shorts? What made me get into the longs, right? So we're going to take a look at the 1-minute chart, right? My entry criteria is based off the 30-second sometimes the 15-second, because the volatility is so high and I want to be able to manage my risk on a very minuscule level. And it just makes it easier for me to view price action on a smaller time frame, right? So what did I see inside of the 750 or the 859.10 macro that made me wanted to get short? We traded up into the macro, right? And if you guys watch my video on macro time and then do your own back testing, what you'll start to realize is once the market breaks structure off these lows, a lot of times we end up trading back up into the macro. And when we trade up into the macro, it's actually a bearish sign depending on structure. When we inject that liquidity into the market, right, based off structure. Oh, thanks, brother. Thanks. Appreciate you, Des. I'm gonna go over my short here in a second, but so, oh, actually, no, that's perfect timing. All right, so this was my short that I took. I took the short at 49.7275, right? So essentially we were up inside of this macro here. What I saw was a doji candle at the highs up there. Once I saw the doji candle at the highs, I entered as price came back into the chessboard here, right? And we go all the way back to the picture, right? And you can see I was actually a little late, but I'm cool with that, right? Like I'm good with that, right? So we ended up getting short on this side of price. Price ended up running that high. And I was like, once we ran that high, I said, you know what? I'm going to wait because I really just want to take the long. But I mean, that was a good scalp. It was like a 25 point scalp. I think I locked in like 15 points on the trade because once I went up like 27, I locked in 15 and then it ran my stop, right? So, but once we came into 859.10, I didn't take this trade, but I told the Discord members, this is a really good short opportunity. I said, I'm done with the shorts because I'm just going to wait until the open. I had a couple things to do before the open. I said, this is a really good short position because we broke the structural low here at 49.72. And then we came back up and failed back at the structural high inside of 859.10 macro. That's a very bearish sign at the top of our chessboard. Chessboard representing Tokyo highs from last night, right? We ran Tokyo highs and then it's representing this price action here. All right. So we continue to trade down. And, you know, a lot of times I like to trade this 929.30 macro, but not when it's in the middle of a chessboard, right? You guys don't know what a chessboard is, feel free to ask somebody. They'll point you to the video to explain exactly how I view price in regards to a chessboard. It's an analogy I made up to help further explain price action. So the next macro was 950, but then when we came down here, one thing I don't do is I don't allow time to trump structure. Structure trumps time. So if price is in my area, but it's not in the macro, I'm getting into this trade because it's in my area, not because it's lining up with time. But technically it is, because what I want to see is I want to see the market trade down from 930. It just extended the sell, right? I'll take you guys exactly to what I saw down to the 30-second chart. And then, you know, hopefully this helps somebody out there for entry criteria, right? So my first loss, where did it come from? It was right here. My first loss was I saw us push down, right? We rallied up, we got above this high at 49.11. I said, okay, we come back down here, I'm gonna get long, right? I got long at like 4,900, chased it a little bit, right? And as soon as this candle started coming down with the death stroke, on a regular day, I would have probably just set through this. But with this volatility, this move is like a 20, 30-point move, right? It's a 30-point move. I was like, nah, I'm cool. I'd rather just take the 3-point loss, right? And then reposition myself. And I'm cool with doing that because the volatility is so high, right? So we melted down, right? We came down, and this is when I started really saying, okay, now we're good. Because once I saw this 30-second candle, I told the Discord, I said, I really like this candle, right? I really like this candle. It's time to start getting long, okay? And my entries were, like I said, 48.79 and then 48.72 and then 48.71, which was about right here, right? And then once we got above these highs, I went ahead and took some profit. And then again, I got trailed out. I got stopped out on the trail, right? My overall target was the chessboard high. I was looking for these highs here, but I didn't need it, ladies and gentlemen. Like, I just didn't need it. What I was focused on more importantly is the fact that I had locked in 50 points on the S&P 500. That does not happen on a regular basis. Now, in hindsight, it ended up rallying 412 points for my entry, but who's counting, right? All right, so if we continue to follow price, those are my trades on the day, but if we continue to follow price, one thing that you don't want to do is get caught with your pants down here, because a lot of people will see us trading up inside of the 950 macro, and they will say, all right, it's time to short this. The one thing that I will tell you that you need to have in your repertoire, right? I'll get off this 30-second chart, is you need to understand what Tokyo did, what every session did before you start trading New York. I'm not even going to name them all, but you got Sydney. I guess I'm going to name them all. You got Sydney, you got Tokyo, and then you got London. You need to understand what these sessions are doing prior to you entering price action. The Tokyo session is here, right? Or the Sydney session starts at 1800. I believe the Tokyo session starts at around 9 p.m. Both of those created our low. 48.30, which is, if you go read my pre-market plan, like I said in the beginning, as long as we stayed above 48.30, it was bullish, okay? If you look at price action, the Tokyo low stayed intact the entire day. It was the low of the day. So that means if we come down here in London, we take in longs. If we come down here in New York, which I honestly didn't think they were going to do, we need to long the market here, right? Like this is where you want to get into the market. You don't need to wait until it gets all the way up here. It's cool if you do, but you don't need to, right? So once we understood that and we got this crazy rally, I mean, I think this thing, I'm pretty sure it went 400 points. It was like 412 points, right? Rally all the way up here to this crazy level. And then guess what? Our secondary plan is we were looking for a break, which this is clearly a break, definitely a break, and retest of the high of the top of this range. Look what we did. There's a trade there, long. There's a trade there, long. There's a trade there, long, 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 long. Every time it tapped this red box, you know, the box that I drew out 2 hours before price action got here, the market developed inside of this area. Now, when we go back and look at time inside of the 1 minute, how was it delivering inside of this area? Okay. 1025, 1045 is a time that I made up. Is not a macro, but I didn't make it up. It's a time that I back tested and I really like it. So I started to use it inside of my trading. And you can see right at 1037, 1038 time frame. Anybody that's been in here for a while, you should know that time. We got the doji candle here, and we never really traded below this level, except we swept it right there just a little bit. But we traded down into this area of time. We traded back up in the 1050. Great short opportunity. I believe Trading Yoga Girl took this short all on her own, right? No group chat, no none of that. You know what I mean? So shout out to you, girl, for killing it. She took this short off the 1050 macro, got out for about 30 handles, and then it ended up, you know, dumping a little more, but who cares? I mean, whatever, make your money. We traded down into 1125, which means I'm looking for the market to trade back up inside of structure. And now we're inside of our range. From 11 o'clock to about 1 o'clock, you can look for the market to range. If it stays range bound, you can sit here and trade this range all day long and you'll be a fat cat. As long as you know where the highs and the lows are, this was about 110 points on a range. Easy money, okay? We come into 1225 as we consolidate for the start of the PM session. We get this crazy candle at 1 p.m. I don't even know what this candle was about, but I think it was like a 75.1 minute candle. Crazy. Like this is price action I don't think anybody's ever seen, but I love it, right? We trade down into 110, which is a good sign that we're going to go up into 315. We failed to get up back above this level, but we consolidated back above this level. So I would say I'd still give the nod to the bulls. They were able to accept price up here above the Tokyo range. And then, you know, it looks like they might want to move higher going into tomorrow. As the PM session came in, we traded down into the 315 macro and then rallied up. But again, failure to get back above this high does bring me a red flag going into tomorrow. But we'll see how the Tokyo session opens. I like to see it gap up to give us some type of sign of continuation. But if it gaps down and the VIX continues to push back up, it's going to be right back down for us, baby. You don't even worry about it. All right. Moving on to the NASDAQ, which I know a lot of people trade, and this is like the favorite instrument amongst retail traders. So I definitely want to put it on the list of things to review. Did I make a pre-market plan for it? Absolutely not. Will I make a pre-market plan for it? Absolutely. All you got to do is ask, right? And you got to ask it in enough time for me to actually get it done. Don't come in here right before the market is open and like, hey man, you do a pre-market plan? Nope. I'll verbally tell you about it, but I'm not going to do a pre-market plan. All right. But the levels were exactly the same. We turn our macros on, right? We get back to the 1 minute chart. We look down at this level. And I think this on the NASDAQ was probably the biggest trade of the year. If you caught this, like, I don't think anybody's ever gotten a 1700 point trade, a 10% move on the NASDAQ, but this thing was a 1700 push right to the top. And guess what? It delivered the exact same way as the S&P 500. Shout out to Dez, because I'm sure he caught this behemoth of a trade, right? I think the guy made over $2,200 on 2 micros. That just is proof that you don't need a lot of money. You don't need a lot of contract size in this market to absolutely kill it. Oh, and shout out to freaking Pip because he caught the bottom. We got the exact same entry on the ES, but he actually held it to my target. Well, to his target, but it was actually one of my targets as well. So shout out to him for absolutely killing it today as well. But the rally off of here, going back to the market structure, right? 945, 950. Again, it's not about the macro all the time, but the macro will give you a confluence, right? But if this trade is in your area, you got to take it, right? These levels right here, these red lines, these were also our weekly projection lows. And again, we're on the top down analysis. If you watch the top down analysis, these levels are not levels that I pulled out of my ASS this morning. I had these levels on Sunday, right? Just based off data, okay? So if those levels are there, again, you don't have to mark nothing on your chart. If you good, don't ever mark it. But I'm telling you, these levels, if you're struggling, you need to be writing these levels down or at least put them on your chart to see how price reacts to them. We get inside of the 950 macro, we trade up to come down, but back into structure. We hold the New York AM price, and then we just absolutely destroy price going back up here. Nice little short opportunity if you like those early entries. Me, I like to let price develop a little bit. So let it drop down inside of here. I probably would have been looking to short inside of the 1050 macro. We trade back down into the top of the range. And remember what I said, break and retest off the top of the ranges once we clearly have a break. This is a clear break. We trade down into 1025, right at 1039, the exact same time. We rally off those highs, push up into the 1110 macro. We come back down, same spot, go back up, go back down, damn near the same spot, right? Like, this is easy money. Easy money. I was busy. I couldn't trade much more, but I also wanted to stay disciplined, so I didn't trade much more. But shout out to Dez again, because I'm pretty sure he caught a body off the PM session lows down here, straight up into these highs. Again, just trading small size and making an absolute killing in this market. And the key right now, doesn't matter if you're a great trader or not. If you're not getting sniper type entries and your risk is managed, you need to size down so you can absorb some of that drawdown, because it's gonna hit you, and it's gonna hit you like a ton of bricks, and you're gonna feel stupid when you get stopped out or liquidated and price literally goes exactly where you thought it was gonna go. You just were in too much size to be able to hold it. All right, moving over to the Dow Jones, last one of the day before we talk about the volatility index. We can see that again, same structure, but there's a couple of little nuances that I want to pay attention to on the Dow that aren't happening on the S&P 500 and the NASDAQ. One thing that I always say is that the Dow Jones is the oldest instrument, and it doesn't get manipulated much because it's the US 30. It only has 30 stocks. It's hard to manipulate 30 stocks. Number one. Number two, it's pure price action, right? It's pure price action because it's $5 monetary dollars per point, right? There's not a lot of stocks that influence this thing. So when it's not breaking, when it's not doing something, I want to pay attention because it's probably the true price action, okay? So it does get this crazy bounce off these lows down here, nice and beautiful. And then it didn't rally too crazy off the macro. So if you wanted the 950 entry, you could get it easy on the Dow Jones, right? We push back up, but look where we push up to. We don't really truly make it up to the previous day high. We only make it up to the daily fib, which is concerning, right? Because again, I trust the Dow more than I trust the other two in general in regards to where we're going, right? And then we come back down here and we actually clear the top of the range as opposed to holding the top of the range. Another sign that tells me that the selling is pretty heavy up there, right? And then we just kind of balance out. But here's the kicker. Inside of the PM session, what you want to really see is you really want to see these lows take out these high of days, right? That's not what we got. Not to mention, just like the other instruments, the 1 o'clock price held and we just slightly traded above it. Just something that I'm taking a look at for tomorrow. We'll see what happens inside of Tokyo. We'll play it, we'll play price action as it is, but just little nuances that I'm paying attention to, right? I'm still very much bullish down here. I like to see the market, range some more and then start to rally up, because ultimately I'm bullish down here, but I want to see if we can make it all the way back up to 40,000, and then I'll be looking to be a bear again, right? Now, where did my strength of the market come from? Where did my thesis gain its strength? Well, if you guys been in here for a little bit, or if you're just joining, welcome. But My confidence comes from the volatility index. I watch the volatility index because it is a reflection of the S&P 500 options market. Therefore, it is telling me the strength of the market. It is inverted directly to the S&P 500. So whatever this does, the S&P 500 usually does the complete opposite, right? So when I saw this morning, we had broken structure to the downside on the 15-minute candle, and I saw us rallying up. If this is rallying up, that means that the market's about to come down. And as this rallies down, that means that the market's about to come up, right? You can see at around 9:30, we were trading up, right, back into structure. And I saw a double top, and I knew, hey, it's game time. It's time to get short. I mean, it's time to get long, because once this goes down, it's going to rally the market up aggressively. So if you're wondering why we pushed down so aggressively, look at where the VIX is. It ran straight to the weekly fib and immediately found buyers. So we'll see what the VIX continues to do in relationship to last week's 50% price, because it got here in one day, and that's never really a good sign for price to continue higher. Instead, it's a good sign for the VIX to continue higher. And if that happens, the target is going to be these 40s and potentially push it inside of 50 by the end of the week. That being said, ladies and gentlemen, that is the breakdown of the S&P 500, the Dow Jones, the NASDAQ, some of the trades I took, and the volatility index. If you guys have any questions, please at me in the chat below. Or if you're in the Discord, feel free to DM me or drop your questions anywhere in the Discord, and I will get to them in my earliest convenience. That being said, this is the market review. My name is T. Hobbs, and I'll catch you guys in the next one, man. Peace.